like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Morning, everybody.
Good morning. Good morning. Troy, you don't sound very peppy this morning.
Well, Matt, I've had a great morning. I went to sauna already today. I've already been to the sauna.
Wow,
I hit it early this morning. Already got biscuits and gravy. I mean, listen, when you're sweating 20 minutes, just heat, hot, you think, what do I want when I get out of the shower? I want to get some biscuits and gravy.
Is there ever a bad time for biscuits and gravy?
The answer is no.
It's the thing, cooking with Matt real quick. Gravy is actually extremely simple to make. Sawmill gravy.
Yeah.
It's really just grease and flour, people. If you've never made it, you can make it from sausage or biscuit or bacon if you've cooked them up. So like you just make some sausage in a pan, cut up the sausage, move it out of the pan, throw your ingredients, your flour, maybe a little pepper in there. Voila. Is that what you did, Troy? Did you make this or did you Hardee's this? Because Hardee's has excellent biscuits and gravy.
We have a local restaurant in Knoxville called Buddy's Barbecue.
They have breakfast?
Well, so here's the secret. There's only one location in Knoxville that has breakfast.
And you've never taken me?
It'd be tough. Yeah.
Matt goes out.
Listen, Dan, these two right here, I go into it, Matt and Rusty. I'm like, all right, we're going to hit this place for lunch and this place for dinner every freaking time. We go to lunch. They're like, I'm full, man. I don't know if we could do dinner every time.
That's because we go to listen. Option Omega company meetings are planned around the meals. That's like the structure is not what is on the to-do list. What do we need to get done to make this platform even more world-class? It's
what's important.
What's for lunch?
Yeah.
What's for dinner? Are we doing breakfast?
Matt goes to town so we can do chess picks. That's kind of my thing.
Oh yeah, Chesapeake. Yeah.
Dan, listen, here's the thing. It's not been my favorite week in the markets.
Totally understandable. Yeah.
It's not been my favorite week in the markets.
Yeah.
You know this is coming when this happens, but it's not. If you're kind of a perma bear, this is not your favorite weeks.
Yeah.
Nvidia beat earnings, but that really, I mean, maybe I thought everybody knew Nvidia was going to beat earnings.
Yeah.
I mean, earnings is the most sham. I mean, these big companies.
I agree with you. I agree.
They just and Michael Burry this morning and last night.
What did he say?
Took to Twitter to more or less share that sentiment that basically all of these earnings numbers are shams.
So this is super interesting because I listened to this whole discussion of Burry and his thoughts on accounting are like kind of making it into the mainstream. Have you guys heard this at all?
No, I haven't.
So there's a podcast that is kind of in the ether for a lot of these things. It's called the All In Podcast. It's got a bunch of VC tech bros on it. Who one of them is in the White House now and whatnot. And they were talking about Burry and I think misunderstood or whatever, misquoted. Here's the long and short of it. A lot of these earnings of the tech companies that are building AI infrastructure has to do with how they are accounting for the life of the GPUs, which they're buying from NVIDIA, although there's TPUs from Google, all this other stuff. Okay. This is I'm not an accountant, but I know enough to kind of explain what the debate is. So these big public, accounting is, people think of accounting as this monolithic, like it's either right or wrong. Like the accounting is right, the accounting is wrong. There's actually a lot of choices when you get to be a big public company. You can make choices of what to do with some of the numbers. And this discussion is simply this: what is the life of the hardware of these GPUs? That's the whole discussion.
Really?
And so when these companies that are doing GAAP, which is the accounting method, generally accepted accounting principles, when they're doing GAAP, they have to declare, and it's somewhat of a judgment call, what is the life of these GPUs? And Burry's position is they're cooking the books by kind of fraudulently declaring the life of these GPUs. And that's kind of his point. And so when you figure out things like free cash flow, it matters a lot how you're accounting for these GPUs because it's such a big spend. That's what's going on. And so he got drug on this podcast, which a lot of people listen to. And they said, one of the guys said, basically, this is too technical. And I thought, is this too technical for Michael Burry? Like, this is not, I just explained it to you and I'm a layman in 5 minutes.
Right, right.
Michael Burry is the guy who got the spreadsheets of the bonds and the mortgages during the financial crisis and was looking at individual houses and doing the math on their mortgages, whether they were correct or not. So I'm not sure that the judgment call on how long to depreciate the lifespan of these GPUs is too technical for Michael Burry. And I know everybody by now has tuned out or is asleep, because who wouldn't be?
Yeah.
But are we like, are our options positions and indeed the temporary status of the US economy, whether it's bullish or bearish, does it hang on how long we're depreciating our NVIDIA GPUs, Troy? Is that what's going on here?
Yes. I think in my mind, it's the way I look at it is people are just like, no one wants to do that when they're riding high, and everybody's riding high right now. It's the equivalent in my mind, and I've never done this. I was homeschooled. I was a good boy. But it's the guy, you have your buddies and you're at a party and you're going to another party, and the one guy that has the car maybe has had a little bit much to drink. Now, any adult or anybody in the room could look at him and be like, did you have anything to drink? Then no, you shouldn't be at the party. But when everybody's in party mode, all your buddies are like, he's fine. He's fine. He's good. And that's what it is right now. It's just everybody's like, hey, AI is the future. Don't mess with the future, bro. It's that simple. Like, don't mess with the future, bro. And you're like, well, yeah, but the numbers are pretty crazy. Like, nerd. Like, that's what we're at right now. It's just,
And don't you, sorry, Troy, finish. Go ahead.
I was just gonna say nerds win in the end.
Yes, that's the important, nerds. But don't you think part of this is when you look at NVIDIA, why now I get for if you're an investor, right? You're an investor, you're looking out 10 years. Okay, you could look at the GP, whatever these things are, and you could look at long-term, should we hold, with our utilities and other stuff in your long portfolio, your retirement, should you throw in a, something that Warren Buffett would say no? Should you throw in, even though he's kind of doing that through Google, should you throw in NVIDIA? And that's one discussion. But the other thing is, when you look at as a trader, I mean, you look at, you think about Option Omega or people who use the back testing and the automation and or just that type of trader. Are these trades, are they in an average of 6 months every trade? Are they in for 3 years on one trade? Of course not. Their universe of time is maybe a week, right?
Maybe. Yeah.
Yeah. A week is long, but let's say 2 days. So part of it is just, it's not so important. I think it goes back to what Troy said. What Troy said is most people knew they probably would be better than expected earnings. And it's just like, whether you believe that it's cooking the books or not, I think our job is, on a day-by-day basis is looking at what the market's giving us. We've seen the last 7 or 8 days, we've seen the big candles. We see what VIX is doing. We see that going into it yesterday, we're at a stinking 23 volatility or 24. The fear of, the fear level was starting to get up there like, oh boy, here it is. The world's over.
Yeah.
And I think our job as short, doing option trades, we're not, it's a different mentality. The investor is saying, okay, what do we think would make sense? And like we were talking in the show yesterday, just basic stuff. Hey, we think there'll be a 50 or there's enough catalysts. We think they'll move 50, 60 points one way or the other. Right. And not that it always does. There's been some NVIDIA times where it hasn't, but there was a heightened level it could move, and it has.
Yes.
And so the key is just, could you, squeak out a few shekels by, okay, a Rick or something that would do it. And, sure, we would like a little more premium, and now Val's back to 19 or whatever, but it's kind of trading what's in front of us. Burry is different. He's not, I think he's right in his view, but he's not in and out of option trades in 4 or 5 days.
No,
right?
No. And even so, here's the other thing with Burry, which was also discussed on this podcast, which was, I picked up the same thing. They're like, and this directly relates to our world and this show. They're like, Michael Burry short $900 million on Palantir, right?
With stock or puts?
Exactly. Exactly. It was, he bought a certain number of puts and they just multiplied it by, like, he bought I can try to find it, or chat, if somebody from the chat wants to try.
It was just 1x of the 10 they said, so it's like 900,000 or
like he bought
9 million
a
or something like that.
He bought a put position, but then CNBC took it and was like, he's short this much. Bruh, like, are you guys deliberately, are you hyping this? Because that's not actually what's happening when you have an options position. Like, when you buy long puts, like, it's a more nuanced conversation of what's going on. But of course, CNBC ran with it, and that's been part of this whole thing, is that Burry's got this huge short position in AI, connecting Palantir and Nvidia, and writing about the power per flop of an A100. Like, does this all sound pretty esoteric? It kind of is.
It's the whole thing. I mean, there's nothing new under the sun. Like, I'm not saying they're a scam company. I'm not saying anything like that. I'm just saying, like, they have like the backing of the cultural zeitgeist.
Yes.
And so that is like this weird thing where, in my mind, it's both. And Apple was this in previous iterations. Apple honestly has been this for a large part of the last 2 decades.
Oh yeah.
Right. I remember years. So I remember years where it was like Apple could move the market tomorrow. Apple's the big one.
That's right.
That's
right.
And AI, like, people wanted. There's a really big there's some really big problems if suddenly everyone really starts realizing that, like, the valuations aren't matching the production getting out of the valuations.
Yes.
And no one wants to look at that. And I think that's what Burry's speaking to. I think that's what everybody's speaking to, is like,
well,
but this could go on forever. This could go on for 5 more years.
Yes.
It will crash. I mean, and crash doesn't mean it's dead. Like, the tech crash of 2000, like NASDAQ got destroyed in 2000, and that was the beginning of the tech. But like, sometimes you have to, Jim Dalton, the market profile stuff, sometimes you have to, like, let short-term business take care of itself. And sometimes that means you need a healthy crash to strengthen the market.
Well, yeah, I mean, to get a 10% correction is very, it's healthy once in a while, right? Now, I think what unnerves people is the 10% sometimes goes down faster than people like, right?
Yes.
And they've got used to it. It's almost like with I don't want to bring in politics, like the Obamacare I think what's going on now, it's like people get used to it, and people, hey, I deserve the last 3 years, or let's say this goes up 20%. I deserve to get 20% in the S&P every year. I'm used to it. My lifestyle has got used to that. Someone might say, which is a bunch of, cocky-pock or whatever the word you want to use is. And I think it really is, the attitude is like saying, Troy, how do we play this game when it's kind of a sham with the, it's just like, you just observe it and say, okay, but doesn't it make you play the game better? If the game is rigged a little bit, you're playing along with it. You're not jumping in. But I think like Burry, the other thing I just want to mention, just as a quick side, not going too far to the side, you get into this option volume. Okay. A lot of people like that, the world of option volume. You can find a lot of news services that, Thinkorswim does this and others, that you can see option volume. And what I like to see is their interpretation of option volume. That's it. There's nothing wrong with saying
yes.
A lot of,
yes.
There's a few good ones that can maybe give you a decent, but, being in the trading pits, shout out Tom Lee.
You were in the pits?
I was in the pits with Tom Lee. No.
Tom was in there too? Shoot.
See, Tom's not admitting it. He's not.
That is a bunch of degenerates if Tom's in there as well with you.
Being in the trading pits, I was in the trading pits, and I'd be in, like, let's say IBM trading pit. And at the end of the day, people be like, where was the volume? I said, there was a lot of volume. I'm not, there's buyers, there's sellers, but even when people say, okay, somebody bought 1,000 puts. Well, what does that mean? Well, yes, there's a little bit, but the thing you don't know is, what if he was long 100,000 shares of stock, and he just, maybe earnings was coming up, or he wanted to hedge it a little bit. Well, so he bought 1,000 puts. He's still long delta, right?
Yes.
On his trade. So you don't. It's just, what gets me is the investigative work. People say, okay, this is what it means with Burry. You don't know if Burry's long.
It's so you're so right, Dan. And it's so
is Burry long? I mean, is he just out there with? Or does he have another fund that's long some of these stocks?
Right. You don't. There's so many details that literally could define this story, and they write a story about knowing this much of the full thing. Mm-hmm. And you have no idea, because the other thing is what happens with these stories is, because he runs a fund, people look at the disclosures that come out. Well, this is the same thing with Nancy Pelosi. Like, she has to disclose activity, but she doesn't have to disclose it in real time. So, like, there's a delay. He could be out of some of these positions, or Pelosi could be out of some of these positions by the time the paper comes out, and you don't know. That's right. And in the case of Pelosi, she's going to do whatever the best trader in the world does, because she's got the inside track maybe. Yeah. And but they write these stories, but like the one from November 5th on Michael Burry short bet. What's the story? It's somebody from CNBC talking about it, and who do they get? They get John Najarian to comment on it. Oh, and sure. It's and it's like, he gives his best guess as what the math is, but Burry's not exactly disclosing, I bought this strike on this day and paid this for it, which is what you would really need to know how the position is doing. And here I go speculating. I'm pretty sure I'd need to chat. If you can back me up, I do think he bought leaps puts. So, I think he's got a lot of time. I chat, if somebody can check me on that, because I don't want to go full modern media and just spout off without verification. But if somebody could check and see, I do think it has been disclosed that he has maybe 2026 or 2027 options. So he has time. Because Troy, what did Nvidia do? How did Nvidia do? What's the market doing, Troy?
Nvidia goes up. And speaking of time, I'd like to share one of the more depressing backtests I've ever seen in my life.
That's what we're waiting for on a Thursday.
We got to brighten up your day. We have to brighten up your day.
Well, I mean,
he's had sauna.
Listen to this. I mean, this is the. It's cloudy.
It's foggy.
It's foggy inside my heart and outside my heart this morning.
Oh.
So listen, but here's a test. Here's a test for all you buy the dippers. Okay. There's not a lot of data sets in this test, but there's not a lot of dates where this occurs. So I'm going to show you this. This is as simple as you can get. You can improve on it. I'm not trying.
Yeah.
I'm not trying to get complicated. I'm just showing something. At 9:32, every day that we are at 20 or above, and the VIX goes down 5%, you buy a QQQ expiring in 10 days, a 50 delta QQQ, and you don't do anything. You just like you would obviously you need to get out if you don't have money. So like all those things, I'm not even going to share it because it's so simple. You guys could all do this. Basically, the two filters are overnight 20, or sorry, VIX 20, and if VIX goes down 5%, just like the market conditions we had overnight. You buy the call and just wait. Excuse me. It makes me sneeze. This one honestly makes me sneeze.
Bless you.
What do you guys think of this beautiful strategy?
I mean, it has shown in the few times that this has happened in the modern era, the market has gone up.
Yeah. I mean, I really like the test. I mean, when you think about, other than like Matt said, to get 10 occurrences over whatever 3 years, but you think about it, I've always said this, what I get concerned about is when the market's down, like, a VIX of 20, what is it telling us? We're getting some down activity, whether we're getting 5% down, but we're getting a good couple hundred points, let's just say, down. And so when we have an up day, it's not like 3 points or 4 points. It's coming up. So very simple parameters, but very deep parameters. In fact, VIX minimum 20, but you're saying, hey, I want a day that looks like it'll go up, which means VIX is going to have a down minimum of 5%. Let's jump on the board. Let's jump on the skateboard. It's a great thing. I guess I'm a little surprised, Troy and Matt, there's only 10 occurrences. I would have thought a few more. If you would have said before the test, Troy or Matt, that you'd only get 10 trades with those parameters, would you have said, yeah, that makes sense? Or would you expect it a little more?
I mean, that's a big VIX crush.
I think that's the key is above 20 with a 5% reduction is a pretty big crush. I bet you if I said min VIX 30 and then min VIX 40, then min VIX 50, you'd have more occurrences. Because you think about like the crush of a VIX where it actually would lose 5% in a day. Usually it's going to be a higher VIX environment, and so the higher you go, I think you'd probably have more occurrences.
But this is getting everything above 20 though, right? Isn't that how you have it?
No. Oh yeah, this is everything above 20. Right?
Yeah, that's true. That's true. I'm trying to think. This year,
I mean, a Liberation Day. Here's the other question. How frequent has it been this year? It looks like it's been kind of evenly distributed. It just doesn't happen, but every couple months, maybe.
I mean, we could do this just to see.
Yes, this will give it. Yeah.
But the other thing, Matt, if we're saying VIX minimum down 5%, 5% is only 1 point on 20, right?
Yeah, overnight.
I mean, today is what? Today's
what, 15%? Yeah.
3 or 4 points today, 15. So, I mean, I wouldn't think the 5% is that restrictive. I mean, if we have an up day after VIX's minimum 20, you're easily going to come down a point.
Yeah. How many times is this? So, I mean, a few more occurrences and maybe not quite as high for when, here we go. Troy's going to keep working on this till we're 100 trades. And
well, I mean, I don't really.
Troy, if you did like 18 or 19 VIX, would that screw it up?
That's what I was going to say. This is actually a mega interesting concept.
It is.
I mean, you could take VIX off and just say anytime it's just down 5%.
Yeah.
Yeah.
Let's go. Let's
I don't
go.
think it would be as good. Yeah.
It's not going to be as many. I mean, I don't know. We'll see. We'll see. I don't know.
The point that was depressing to me as someone who likes to play reversion is basically this is saying,
there you go. It's
Still
happened
only
25
25.
times. 25 times. VIX
so
has only been
5%,
overnight
5.
5%.
I mean, honestly, it kind of makes sense. I mean, it is 16 VIX.
Yeah.
If it goes down 5%, it's not going to go down 5%
Oh, I got you.
in any given day.
Overnight, though. That's what we're
Yeah.
measuring. The only qualification for this. Oh, you also have exact DTE on, Troy. Uncheck that and see if you get.
Oh, shoot. Yeah.
See if you.
That's probably it. Yeah. That's late night back testing on Troy's part. Oh, this will actually make me really happy if this suddenly turns into like a loser. This is actually going to make me really happy. You're going to see like Troy get really pumped if this actually doesn't work at all.
Oh my gosh. You found the secret sauce. There it is. Listen, 57% of the time it works every time. Classic quote.
Yeah.
Well, here's the thing. It still obviously works, right? Yeah.
Crazy.
Because it's dumb. I mean, it's a dumb just
to buy the dip.
Well, I mean, you literally are just buying 10 days out.
Buy the dip.
And you're saying but here's the thing that's painful to me. It's like a day like today where we're up 100. Everything in me says revert.
I know.
Just revert.
Well, listen, this still loses almost half the time. So you could be right. You could be right.
Oh, you could play both. I mean, you could play both. I mean, it is bull buyers, dip buyers.
Now, let me ask you, Troy, on a day like today, okay, everything tells you to, okay, let's, whatever it is for the downside. Would you consider like an approach, maybe scaling? Do you, okay, I would normally buy, let's just say it's puts, buy 5 puts and fade this. All right, I'll buy 1 to start out with. Or are you kind of all in? I mean, when you want to kind of go against a move, would you kind of?
I'm going to be honest. I'm in a weird foggy headspace because last night I did some research. I've been working on something for about a year now.
Okay.
Where it's not ready. I haven't traded it. It's not ready. But I've been trying to think about like a system of trading. Not systematic trading, but like a system of a couple different types of trades that at any given time they could all be on, but at any given time maybe you're kind of reverting a little bit, some of them. And saying that to say, I think we had been at the kind of in a bottom range for so long that you knew you were going to get reflexivity to the upside. This is where I kind of lean on market profile stuff, honestly, where I look at it and I say, okay, are we getting back into previous ranges or are we rejecting back down? So you kind of wait. I would wait to see if like, all right, we're clearly going to gap up and we're going to open into probably Monday's range, Friday's range.
Yeah.
And if we kind of, and you've taught me this, like let it breathe for a minute. Like, is it going to go up? Is it going to go down? That would give me conviction. I have enough positions on right now where like, if it keeps going up, I'm fine. I mean, I'm not, the secret is it's like CNBC. I like to do personas where it's like, Troy's a perma bear. I got plenty of calls. Don't worry about old Papa Bear, but that it's an interesting thing. One thing I wanted to see real quick, just looking at that, is I'm going to switch this. I'm going to say, instead of just buying, we're going to
vertical.
Yeah, let's just sell let's just sell a put vertical. Or sell a put vertical. I put credit spread. Because a quick cursory glance, it doesn't seem like it goes down that much. The call loses because you don't necessarily get in the.
Yeah, so this will wait. Are you wanting to do a put credit spread or put debit spread?
Like I said, my mind is just completely. You guys are watching a mental health crisis in real time.
This is
This is
you're watching a mental health.
The sauna just got intense.
It was,
a little too
listen,
intense.
they have a warning of a max limit in saunas for a reason. And so here's an interesting one. So again, 50 occurrences. What does this tell you? What does this tell you? Where does market go? Market's been going, it's just been going up.
Yeah.
It's just been going up the past couple of years. You look at it, we're going to be at what are we going to open at? 67? Well, I don't know. By the time we open, we may open at 67.50. I have no idea.
Yeah.
But market go up.
I'm putting the kicker on it.
Yeah, what's
What's the kicker?
Use that put credit spread to pay for that call a little bit.
There it
I love
is.
that thinking. I love that thinking.
Yield risk reversal.
To answer your question, Dan, let's just go harder. Let's
love
go harder
that
in the
thinking.
paint.
So let's see what he's got. He's got
60% of the time it wins every time. You have some pretty nice winners there.
Yeah.
Because you're doing this far enough out of the money. Your put credit spread's only kind of, if you want to do it more intensely, do like a 45 delta put credit spread. Huh?
Well,
that's what I was just going to say, like if you're going directional, which we are here, do an at the money put credit spread, maybe wide or something like that.
I'll do you guys.
You're getting a better ratio, risk reward.
I'll do you guys one. I'll do you guys one even more.
There it is. There it is.
Wow.
Risk reversal.
Risk reversal.
hit the old
Go for the home run.
Yeah, hit the old
so this is the unlimited risk, unlimited reward variation.
Just you are all in. You have a chip and you bought an Nvidia chip to be implanted inside you. This is
you're going, yeah.
He's going for the fence. He's going for the fence. Yeah.
You trail a dolly every day that has H100s just stacked up, and you're just running. You're just mathing all day. You're running computations.
Right. Yeah. There it is.
There it is. There it is. This baby's going to exercise in one direction or the other.
Yep.
Yeah.
Yep. So anyway, what's the point of today's show? I don't like Nvidia. And I don't like today's show.
You are running Michael Burry's Twitter account. Is that what
today's show is brought to you by Dip Buyers Win Again. The Dip Buyers win, and some of them get crushed all the time, but the overall market trajectory is up, and that's an important thing.
Yeah,
that's why
generally, if
you think about our system in America, at least our economy, that's why there's maybe $1 trillion, $2 trillion, I don't know, billions and billions of dollars every month that if you're working at your job, you're working at a factory, you're working at an office, you have people at your company who on your behalf are going to just go buy the market every month.
Yeah.
That's called a 401k.
Yeah.
Every month they're just going to buy the dip.
John Bogle's about to manifest back from the dead, be a guest on our show and talk about the magic of passive compounding investing.
Mm-hmm.
But you're right. You're right. Like, is it, is part of the reason Fridays are bullish is because people's paychecks hit on Friday and ETFs get bought on Fridays?
I know I'm working for the weekend. So. All right, guys, listen, we'll be back tomorrow. I hope that everyone just stays safe. I don't hope that the market goes down. Yeah. I don't hope that the market goes up. I just hope everybody has good risk management tools. So y'all be safe. We'll be back tomorrow. I think the news, we didn't even talk about the jobs report, but listen, they're firing people that do bad jobs reports. So we're up 105. We may indeed open at 67.50 or something. Love that. Love that.